control computers now have primary control of critical vehicle functions.
All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM. One sec. Yeah, hope you guys are having yourselves a fantastic start to the AM here. Happy Monday, right? Hope you had yourselves a refreshing, recharging, and good weekend, right? Few things, right? Should look a little bit, I mean, hopefully my screen looks pretty much the same like it always has. Made a few changes here. I've got my order window up, so if something does come up, it'll be set up to look like this. You'll see my executions come up, etc., etc. So we'll see how that sort of shapes up here this morning. But yeah, want to talk about a little bit over just making sure, right, we're controlling the variables we can control. Now, the reason why I switched to this pyramid trading technique is because I wanted to force myself to lose small, right? So by putting myself in situations where my max loss per trade is about 500 bucks with a 150K account, that gives me the opportunity to take like, I don't know, 10 or 12, right, consecutive losing trades in a row before I end up losing access to my account. So that's primary focus number one, right? Make it next to impossible for me to deal with a catastrophic amount of drawdown. If you're trading with a 25K account, a 50K account, or a $100,000 account, and you're willing to still take on that same amount of risk that I am per trade, right? So that $500 to $600. Well, all of a sudden, right, you can't deal with that same amount of risk, right? You can't have 10, 15 consecutive losing decisions in a row and keep access to your account. So you can either A, choose to live with that potential outcome, right? And accept that, hey, I'm going to have some periods where I deal with some drawdown. Or B, right, you can size down and trade micros and give yourself an opportunity there, right, to survive. The second thing that we focus on here with this pyramid technique is getting an exceptional risk reward return on all of our trading decisions. So even though we set up our Fibonacci tool here, right, to give us that 3-to-1 approximately, we're pretty rarely buying at that 236 fib level. We're either getting a deeper pullback, right, and getting a more justified risk reward, or, right, we're using the aggressive entry technique and getting a much tighter risk reward ratio at that point. So if that's the case, right, that means that in practice we're getting a 6-to-1, 8-to-1, a 10-to-1 risk reward, right, and getting paid out significantly on some of those ideas. The winning trade, right, that we had there on Tuesday, I think it was, right, that was the big win of the week. We made $7,000 approximately, right, from a total risk of 500. So that's not 10-to-1 risk reward, right? That's not 12-to-1 risk reward, right? That's like 14-to-1 risk reward on our trading decision. So we're trying to force ourselves to lose as small as humanly possible, right? So 1 contract, 2 contracts, right? Keep our max losses to be incredibly limited. But then we're also trying to give ourselves upside there with our risk reward calculation so that our win rate doesn't have to be 80%, 90%, 100% for us to be green. So we're trying to use both of those two core concepts, right, in unison to put ourselves in situations where we can kind of be consistently profitable. So what happens if we change those formulas? Well, if you decide that, hey, I'm going to close my trades every time I'm up $1 when I'm risking $1, well, now any period of drawdown is going to significantly impact your P&L. If you're not going to trust the strategy and let your winners play out, well, all of a sudden, right, this strategy is not going to work for you. No strategy is going to work for you. And it is very important that we not only obsess over protecting, right, ourselves from our downside liability, but that we also protect ourselves from our fear of our winning positions turning into losing trades and like punishing ourselves so that we can't actually maximize those risk reward ratios. I got a message this weekend that I did not like, and the message was fundamentally requiring me to have an 80 or 90% win rate for that person to break even, right? Not make money, but break even on their trading. It was completely unrealistic over what types of expectations they needed because they were unwilling to give themselves any margin for error inside their trading decisions. So, although last week wasn't a win rate of greater than 50%, right? It was a win rate of like 45% on the week. My one big win was 12 times the size of my average loss. So it's not that I'm relying on big wins to make me money. It's not that I'm relying on big wins to bail me out, but they give me margin for error so that I can survive choppy conditions, so that I can survive bouncy markets, so that I can survive conditions or mistakes or anything along those lines. So if you were unhappy with your trading performance there last week, you weren't satisfied with your P&L, and you're trying to solely judge yourself based off of your win rate, then you are not giving yourself a complete picture and you are setting yourselves up for failure, right? We focus here fundamentally on managing our risk, trusting our technique, and playing with a good risk reward ratio so that we do have space to actually consistently be profitable. And if we're going to focus on losing small and we're going to trust our strategy, but we're only going to trust it up to a 1-to-1 risk reward, then you will not make money, right? If you're willing to trust the technique and you're going to let big wins, right, happen by protecting your position, by scaling out as your P&L is increasing, by doing everything along those lines, then you will do just fine inside this program. So what my job here, what my obsession, what my emphasis is on a day-to-day basis is the relentless execution of my system. And sometimes you're going to get your ass kicked, right? Sometimes you're going to kick ass as well. And we cannot allow our fear or our greed to influence our decisions and get us to avoid trading our system. So the position sizing requirements that we have only work when they work in unison with our risk reward requirements. Just because we set ourselves up with a risk reward doesn't mean that we actually get the perks of it if we don't trust, right, for that to actually play out. And this idea that allowing your trades turn into winners hurts you from a trailing drawdown perspective is fundamentally false. And why is it false? Because we closed our position there on Tuesday at a profit target, right? We didn't let it go up and pull back and stop us out back at entry price. We closed it at our final profit target. So we closed it as our P&L was at all-time highs. So if you want to fight back against those fears, I need you all to commit to trading this technique and understanding that there are going to be pros and cons with it, and not expecting or anticipating that I'm going to have a 100% win rate to overcome those flaws, right? That I'm going to have a 100% win rate so that you have a margin for error with your decision-making process. You get a margin for error inside your trading by focusing on your risk reward, allowing your trades to actually come together, and scaling out as your P&L is increasing, instead of panic closing it at, 1-to-1 risk reward every single time. So for me, this is the thing that we need to focus on and maybe get better as a group. It's not to say that I'm happy with how my trading went Thursday, Friday last week, but it was a good week, right? It was still a very successful trading week. And if we are going to force ourselves or put ourselves in situations where the math does not work in our favor, there is nothing I can do from a trade to trade perspective to bail you out. So I need everyone to commit to trusting their process, trusting the strategy, trusting the technique, and putting themselves in situations where they have a margin for error that isn't based on a win rate, right? If you need a 70, 80, 90, 100% win rate to make money, you will lose everything the first time you deal with a losing streak. And you will have a losing streak. We all have them. So that is the primary focus here for the week. That is the thing that I am obsessing over. That is the element that I care about more than just about absolutely everything. All of our elements, right, of our trading, our strategy, our position sizing, and our risk management, it is equal thirds importance. It is not just one thing that makes us money. It is not just one thing that loses us money. It is the combo of those three things working well in unison that allows us to be profitable over the long term. And if we're going to neglect one of those elements, or we're going to ignore or not trust one of those elements, we will not make money. So with that being said, right, I mentioned this in the Discord already, my objective here is to continue to be even more transparent with my process so that you all have no excuses, right, over how you're trading, why you're trading, and you can take accountability for your decision-making process and finally scale up your decisions, as there is no profitable outcome to your trading if there is a lack of accountability to yourself. So with that being said, let's start mapping things out here this morning, put ourselves in situations where it's easy to be green, and then hopefully, right, we can have ourselves a strong trading day. So good morning, Suresh, Howell, Tony, Sabrine, Devin, Ruben, Constantine, Rame, Brian, Daniel, Steven, Dustin, Jeff, Bugs, Nate, Emil, Antonin, Sammy, The Lift Project, Rod, Ryan, John, Jen, Craig, Tanja, Chad, James, Kenneth, Ben, Juan, PJ, Brian, Tasha, Emmanuel, Mike, Raphael, Randall, David, and Ronnie. Hope you're all having yourselves a fantastic start to the AM here. And let's have ourselves a fantastic AM. So, first things first, what's the count here on ES? Let's start there. And let's fire through this prep. Yeah, so if it's a 3 for 3 to the downside with no volume, Juan, then it is not a 3 for 3, right? Because volume is one of the elements that you need to see to have a 3 for 3, right? So you need to see a red candle, you need to see red increasing volume and a gap down for it to be all three elements syncing up. In this context, right, Dustin is correct here. It is an inside bar. We didn't make higher highs and we didn't make lower lows there yesterday. So we're looking, right, for a breakout here of consolidation. That means, right, we can look for either a breakdown here towards, we'll say, like 57.30, or, right, we can look for a breakout here up towards all-time highs, which is approximately 58.30. So we got ORB fake out here in either direction. Okay, and then we're targeting 57.60, right, as our starting point, and then we go like 57.30, 5700. Good morning, SG. All right. And Q, what's the count? And just so you guys know, right, I made a few changes here to my OBS. So if it looks a little bit different, please let me know. But main thing here, I'll be bringing up my order window, right? And I'll keep it like this. But you'll see, hopefully, the alerts come out for when I enter a trade. And you'll see like the position or my scale, right, from where my position is. Is that fair? All right, so yeah, we got 2 out of 3 here to the downside without volume. Just to build off of that, guys, right? I don't want you obsessing over watching me, right, entering my trades. Because if you're going to be watching me enter my trades and then making that entry decision after I've done that, you're going to be significantly behind my price, my risk reward, and my risk management. So this is here, so you guys have total and complete transparency over what I'm doing. But if you're going to be watching what I'm doing in my order window and then entering and setting it up yourself, you're going to be a minute, 2 minutes, 90 seconds behind my entries. And all of a sudden, right, you're going to be getting significantly different math, right, on every single one of my trades. So I need you all to look at that as a tool, not as something that slows you down inside your process, right? Hopefully that's very clear. Well, when it's time to trade, yes, right? But right now, there is no time to trade, so I'm hiding my order window, Emil. Okay, and then to the downside here, right, we're going to target like 2,100. And then 20,000, and then like 19.8, 19.6. What's also happening here today? So what is today? Today is September 30th. What does that also mean today is? Any ideas? Yeah, it's quarter end, right? Spot on. Personally wouldn't be my strategy, Suresh. I'm not going to blindly buy before Q3. Well, I'm not sure if it's going to be choppier than what we saw last week, right? We basically got no days of range there last week. So we'll see. Okay. Apple. Let's get rid of this. Red candle, decreasing volume, gap up, right? 1 out of 3 here. Tesla, inside bar. You called it, right? Setting up as an inside bar, did that. So we're looking for a breakout above like 262. Inside bar on increasing volume's kind of gross. Because if the volume was so strong, right, why didn't we get more enthusiasm than what we saw there? Microsoft, right, 3 for 3 here to the downside, but it's kind of a weak 3 for 3 because the volume's not impressive. So we're still looking for a pattern breakout. That's in either direction, right? Amazon, decreasing volume here. Kind of maybe like a little bit of a trend line breakdown. You'd anticipate that to happen on bigger volume, though. So let's get under... I'm going to say this next point of contact here is like 185. And then potentially like a Bollinger Band reversal type setup. Okay. AMD, not quite an inside bar. It's got a little bit of a gap to fill. This might be like a bottom-up gap fill. Or, right, we're looking for a breakdown here under like 162. I don't personally trade stocks anymore, at least not in like this way. I look at stocks here on a day-to-day basis so that I have kind of a understanding of how the internals of the market are behaving. So the more consistent of a narrative I see across the board from Apple, Tesla, Amazon, Nvidia, right, etc., then the easier it is for me to trust the consistent story I get on an index level. So I'm more looking at it just from a how consistent is the story type element instead of looking for a tradable opportunity. So I do my analysis on them pretty quick. All right, Meta, inside bar. We need to see 578 or 562. Not much changing. All right, Netflix, lower low, lower high. Again, weak, 2 out of 3 here. And then we're going to look for a breakout here over like 711. Nice. And then to the downside, right, still under that 700. Okay, Google, weak red candle increase, sorry, weak green candle, increasing volume, a little bit of a gap down. So we'll call this a weak 2 out of 3 with volume. So we're looking for a 166 breakout and then NA here to the downsides. And then VIX significantly elevated here this morning, 17.24, right? That's a full 2 points higher than Friday. So definitely gives us a little bit of an opportunity, right, for some downside momentum, and should give us a slightly larger range, right, than what we saw for the majority of last week. So let's see where that momentum shows up here, if it does, and then we can kind of go from there. But for me, guys, right, the emphasis above everything else here today, right, is allow all 3 elements to work together and don't neglect one over the other, right, or prioritize one over the other. So strategy only works if our risk management and our risk reward is all in unison. Your risk reward is meaningless if you don't trust your trades to give you that follow through. So if you're prematurely cutting your winning trades in fear of them turning into losers without a rational reason to do so, then you will never make money long term, right? Now, if it doesn't hold an area of support, or it gives us those like rapid breakouts like we saw some points last week, right? And then, you know, quick reversals. Okay, those are different scenarios. Those are kind of exceptions, right, to the rule. But if you're going to not trust your winning trades to continue to win when they're behaving like you expect, and you're just going to panic close them, you will not make money. So this week, right, it's an emphasis on trusting the strategy, trusting your risk management, and trusting your risk reward, and trusting your plan so that everything can come together. If you're only going to do one and then trade your P&L, you will be in deep, deep trouble. And then just want to also clarify, right? The reason why I trade with $500 worth of risk on a $150,000 account is so that I have plenty of leeway, right? I can survive a losing streak. I can survive drawdown. I'm always within 1 or 2 trades of new all-time highs inside my portfolio without getting on that P&L roller coaster. So if you're sizing your positions to the point where inside your drawdown you are on that P&L roller coaster, I would ask you to reevaluate your decisions and to either trade micros, trade a different account size, or ignore trades that don't give you that ultimate or fantastic risk reward ratio, right? So start by making it impossible for you to lose. Then focus on trusting your plan so that you can get a margin for error with your decision-making processes, and fight back against your fear and greed so you can actually see the pros and cons of your technique, right, actually be executed on a day-to-day basis. If you need an 80 or 90 or 100% win rate to be profitable or to maintain your psychology, you will not be a successful trader, because those are unrealistic expectations, not only on yourself, but on any service provider. No one wins that high, right, on a pure day trading strategy. Now, if you're selling premium, you're doing something along those lines, okay, maybe we could have that discussion. But if you're anticipating yourself to be a pure day trader, don't expect yourself to be perfect. Build in that margin of error, build in that safety net, and you will be successful. Ignore that margin for error, remove that opportunity from yourself, and you will struggle. So we have a minute here before market opens. I'm going to go make myself a quick cup of coffee, spend a few minutes here visualizing a successful trading day, and then hopefully, right, we can take advantage of whatever the market gives us here this morning. So I'm back in a minute here, team, and I'll jump on then. And do we have a deal? We have a deal here, everybody. We're going to allow everything to work in unison. We're not just going to obsess over one factor. We're going to put together all 3 elements. Is that a deal? All right, good. Be back in a minute. All right, so we have some data dropping 9:45, right? And then a little bit of some action slightly later on in the morning or in the afternoon, right? With some Powell comments there at 1:55. It's going to be a busy Fed speak week. Yes, it's $20 a point, $5 a tick. Correct. Good volume at today's open on NQ. 22.2 versus 19.8. So again, good volume on ES. So we are seeing a decent enthusiasm level here, right? That's larger than what we saw on Friday. And again, if I get a trade, I'll bring up my order window. So it looks something like this, right? And you'll see me jump in. You'll see me get out. And hopefully, right, we'll see the alerts also pop up so you guys can see that position. I should have it set up where my stop loss and entry price will be visible on the screen. But again, like I mentioned here to start the day off, if you're waiting to watch me fill in that order window and then filling it in, you are going to be significantly behind and the math is not going to work in your favor, right? So this is here for transparency purposes. I do not want you guys to be sitting there copying me, waiting for me to fill it in before you fill it in yourself, right? Do not want that. You will always be late. You will lose more money when we're wrong, and you will make less money when we're right. And if it ends up being a detriment here, then I will just go back to what I was doing before. Understood? Good morning, Greg. All right, so a little bit of a higher high, higher low, but not increasing volume here yet. And again, we've got data at 9:45, so I'm going to be a little bit cautious, a little bit patient. And one thing, well, Emil, right? We map out our entry zones, right, with the Fibonacci technique. So, okay, let's say we have it mapped out. Your objective then, right, is once you have that risk reward zone, to find your spot inside that area and then look for your opportunity, right? So anywhere inside this zone is as good as it can possibly get. And I'm always going to tell you, hey, starting to look for an entry, starting to not look for an entry. And so it's not like the second I say I'm looking for an entry, I'm clicking submit. Right? So you need to take accountability for that opportunity. A 3 or 4 second delay should not be anything near significant enough for you to miss out. If you're waiting for me to say that I'm in a trade and then you're setting your window up, okay, now, right, you're gonna look for that. You're always gonna be late, right? You're always gonna be 40, 50, 60 seconds behind. You're gonna be chasing. So if you want to be getting good entries, you have to be accountable to yourself over your entry timing once we've boxed in that window, right? I can't really answer that question, Juan, right? Because it's there's no like absolute, right, for when I click submit. It is okay, once I'm in my risk reward zone, once I'm happy with my possible position sizing, once I'm happy with how slowly things are pulling back, that then becomes, right, the reason to click submit. So that is influenced by a million variables, right? That's influenced by, okay, how has price action behaved here so far this week? How well did I sleep last night? How anxious am I this morning? How XYZ, right? So I don't have like, it's not realistic to have the exact same process every single time. I can't give you the point exactly. I can tell you when I click submit. But for me to give you something other than that, right, would be disingenuous. Right? And it's not something that really exists. So all it is, right, is it's essentially a formula of, okay, am I inside my risk reward zone? Yes. Am I getting the position sizing that I want? Yes. Does price action look like it's moving slower lower than it's moving faster higher? If I have all three things telling me the same story, then cool, right? I should have no reasons to avoid taking the trade. But I can't like, there's not some, like, I don't know. There's not some like indicator I'm looking at or anything along those lines, right, to click the trigger. Ultimately, you have to do it when you feel like it's best. And you saw last week, right? Later in the week, I kind of felt like I was consistently a little bit early on my entries. And why? Well, probably because I was a little bit greedy. I wanted to turn a great day on Tuesday, Wednesday into a great finish Thursday, Friday. So you note that down, you track that in your journal, and you overcorrect, right? Or you look to make that correction the following trading session. So I don't want you to obsess over what is my best entry timing. I want you to obsess over what is your best entry timing. Why did you choose to make that decision? Why did you choose to enter that trade? Because the more accountable you are to yourself for your decision-making processes, not only do you learn more from those decisions, but when you think back and reflect on your trading, you're going to remember why you did something, right? So in the short term, it might make you, or might cost you a little bit of money. It might not get you the perfect entries. But if you're deciding for yourself why you're taking a trade and then you're tracking those elements, well, now when you journal your decisions and you go back and reflect on your process, you're going to have a much better understanding over why you behaved the way you did. And then the next time you get to that fork in the road, you're going to be able to make a better decision. But if you're relying on me, right, to make that decision for you, then there's always going to be a level of anxiety and a lack of clarity over when to pull the trigger. And when you have that, you're always going to do what you are most emotionally inclined to do as a trader. So if you're fearful and you're waiting for me to plug in some knowledge gap on your entry timing, then you're going to skip and avoid that trade. If you're greedy, then you're going to rush in and you're going to overtrade, right? Or over leverage or oversize and do something along those lines. So I've been talking about it a lot here this morning, right? But if you want to be successful, you want to make a lot of money, then you will make more by being more accountable, by taking accountability over as many parts of that process as you possibly can, and then tracking those elements inside your journal and learning from your process. Right? I've said this before, right? But my job here isn't to give you a shortcut necessarily, right? Or that's not the primary focus. My job here is to give you all the tools that you need to be profitable. So that is a strategy. That is a risk reward ratio. That is, talking about how I'm timing out my entries. That's doing all of those things. And hopefully I can make those tools for you feel as light as possible so that you can overcome and create new targets, right? Without it feeling heavy. But if you're not going to take still accountability for some of those decisions, then you will always be missing something, right? And you'll repeat the same mistake trade after trade, day after day, week after week, month after month, and you will struggle. So my job here isn't to do the lifting for you. It is to show you exactly what I'm doing, break down my process as best as I can, show you how I learn, adapt, improve, right, and evolve as a trader. But I can't take that accountability on for you as well, right? That won't make you money and it won't make me any money. And it's just going to create frustration. Is that understood? The simple reality is I can tell you when to buy and sell, and you can still lose money even if I do make money, right? That is the reality with trading. So if you want that to not be your reality, then you have to study the things that cost you money. Not the things that cost me money, right? Not the things that cost Mike money or Dwayne or Emil money or Juan money. You have to make your trading personal to you if you want to get the most out of this room. It's the only way you'll be successful, right? The only way. And I've said this before, and I will say this again. The way I trade in here on a day-to-day basis is extremely selfish. I am doing what I think is best for me and my account at all times. That is the first thing on my mind, right? My first thought is, okay, how can I trade so that I make money? Obviously, I want you all to be profitable as well, but my primary focus, my primary obsession is what do I need to do to be green, right? So it's not to say that we can't work as a team here. It doesn't mean that we can't all have excellent results. But everything I do on a day-to-day basis is based on that. So the opening range breakout technique here, or this indicator, it's mapping out the highs and lows of the first candle on each individual time frame. And then its profit targets are 2x whatever that opening range size is. So it's a judge of the opening candle's volatility, and then the profit target is 2x whatever that volatility is. Chad, if you go inside the Discord into the trading docs tab, there's going to be a video here called the opening range breakout strategy, and it's like 20 minutes long, and it'll break that down in as much detail as I possibly can. Okay, still not a good enough candle here on this 3-min, right? Although its bottom wick is bigger than its top wick, it's a fake out above high a day without being able to close and hold that area. No, because it's a weak candle shape, right? We want our confirmation candles to look like 1, 2, or 3. That looks more like candle 4 or 5, right? The wick of the candle is significantly bigger than the body of the candle. So we know a lot of that volume is actually sellers above 2237.50. Yeah, we at this point, right, we've seen it get stuffed at 2260. So we'd like to see it break out and hold above that area. Right? If we've seen price action fail above us, it's not exactly a good sign that we get a pullback and then go from there. Yeah, not a huge reaction though, right? All things considered, not a huge reaction. So far, no go. So we got to hold right above this, like 263 on increasing outlier volume. So if we get above, right, this red candle from a volume perspective, that should be outlier. On ES, right, we want to hold above that 791 rejection. Right, same thing with CL, right? If it's a high volume breakdown, we can't really make lower lows and can't hold past previous area of resistance. Doesn't exactly feel like a high conviction breakdown, right? What's the time here? 9:54. Yeah, with today being the quarter end trade, might end up being a little bit of a slower session. If I end up taking a dopamine detox day, that is not a bad thing either. And if we look at it from an index perspective, we've not had much separation since making higher highs, right? So if this is giving us a little bit of deja vu, right, to what we've seen here from the market so far last week, then maybe, right, we're being sold the story of, hey, be patient, don't be an asshole, and see where price action wants to basically behave once it gives you separation away from that consolidation. For now, not really getting a reason to trade here. No, it doesn't mean lower volume, right? And we can say that objectively because today's opening volume standard, right, was larger than Friday's opening volume. So it's not that. But when you get a quarter end or month end or year end trade, a lot of what that can be would be like portfolio rebalancing, right? So it'd be like, oh, we've got the election coming up in November and we're underweight in whatever Donald Trump's stock is, right? Like it could be something along those lines. And so instead of it being like a price action indicator, it's a, okay, let me just buy this up so that when Q4 starts, I have the exposure that I want. So it doesn't mean lower volume, and we can say that objectively because we've already seen more volume, right, at today's open than Friday. So it's got nothing to do with that. It's a positioning-based problem. So this NQ's a little bit interesting. Not sure if I have the courage. Should have to be something like that. It's no 10 a.m. data today. So stop loss 2234. 50. So as is, right, you'd be risking about $275 a contract, right? Pretty reasonable. Going to buy myself a little bit of time to make this decision. Here's how things are set up on my end, right? Limit order ticks at bid, stop loss ticked right at the correct price, 22.30, 50, 34.50. Just not sure if I've seen really the correct reaction here yet. So what I have here, right, is everything is set up. Not trying to panic, type things in, not trying to do anything along those lines. It's good volume. So now it might be on the 5-min where it's more appropriate. So again, stop loss now would be changed, right? 22.11.50. And so as is, right, be risking about $300 a contract. But still, no rush to make this decision. Let this thing pull back a little bit, right? See if it gets stuffed again. And then we haven't really seen that elevator down. So being very patient here. So for now, respected that 211.50 pretty well. Let's see if they can do it again. Within reasonably. We're just getting stuck right at that 2200 area. So no reason to jump in here yet with any aggression. Okay, right? See, now it's above. So now we change this. 216.50 by the looks of it. And it's climbing. And if we look here, right at ES, that's also doing the same thing here. All right? So now stop loss have to be 222.25. And we're well above that 2200 area. So this idea that we've got an elevator down, stairs up, not really in play here so far. right? Not the correct reaction that one would like to see. So again, buy yourself time to make this decision. In the short term, right, ES just gave us an increasing but non-outlier breakout to the upside. And not above high a day, just above the opening range high. So we'd like to see that fail and cooperate. I would like to see this thing get under 2,200 here. Again, price is set to being at the bid. So that means this would be a one contract play. Still no elevator down, right? This has been going slowly higher, slowly lower. Nice work, Jeremy. So I'm being very cautious and patient here. Right? We haven't seen a clear resolution away from this $200 area. So I am being patient. And then as like a general rule of thumb, right? If I'm going short, I want to be buying short on the uptick. If I'm going long, I want to be going long on the downtick, right? So this is how things are set up, Chad. Please make that own decision for yourself. Do not rely on that. All the information you need is here, right? All the information you need is based off of that Fibonacci area. Okay, so now it would be like this. Right, so red line would be stop loss. Anywhere above this green line is a reasonable entry. Again, we're still looking for the correct reaction here, right? That's a decent rejection there. You sure you have the correct stop loss in place, Nicholas? Okay, so starting to watch here very closely. All right, guys, I am in. Average price 21.85. Actually, I don't think I got a fill. There we go. Now I'm in. One contract. No, guys, I need you to rely on your own entry process. If you're waiting for me to show you my order entry window and you're not setting it up yourself, you will lose money. I don't understand what is unclear here. Red line stop loss, anywhere above this green line, good entry. Position sizing 1. I don't understand. How baby do you need to be, right? I'm already in a position. What's my order window going to do? You see my red line here with my average entry price. So I don't understand. What more information can I possibly give you? Please enlighten me. Great entry, Jen. Fantastic entry. You can see my P&L. You can see my stop loss location. You can see my profit target, right? What else do you want? I cannot be more transparent than this. Okay, so far so good. Up $215. Let's see if this thing can break down here, right? Make lower lows through this opening range on some volume, and then we can look to build up our position. Nautilus, does that make sense? Right? So I need you guys, right, to be accountable for your own order entry timing. You seeing what I'm doing is not going to make you profitable. You need to be accountable for yourself there, because I can't help you otherwise, right? If you're chasing my entry, you're waiting to see exactly what I filled in before you fill in your entry, means you're just going to be late, right? That's literally all it means. Okay, so I'm closing this, right? Because I do not like that candle's fake out lower. So I am out of this trade. You have just seen me close that position for a $110 win. Okay? And you saw me close that trade. Clear fake out scenario there on volume. If bears were strong, why couldn't they hold lower lows? We've got ES, right? Not also breaking down here. Other leading names holding at these highs or showing us a potential reversal scenario. So I'm not going to get greedy here or allow myself to get stopped out. I will take the small win and reset. Does that make sense to everybody? Is that very as transparent as it possibly can be? You all saw how I just clicked X, right? I didn't do anything special. I didn't do anything crazy. I bought myself a little bit of time to make that decision once I saw that fake out. And then had I gotten Jen's entry, for example, okay, feeling a lot better probably about that trade, but got in a little bit early at that 85. So I'd rather just take that win, move on, right? Get that winning feeling, taste in my mouth again. And if it sets back up, it'll set back up on another time frame. No worries. If it doesn't, no worries. But I need you all, right? This is the first thing we talked about here today. If you want to get good entries, you need to hold yourself accountable for your entries. If you're waiting for me to say that I'm in, you're always going to be late. And then when you're late on your entries, right, then you're going to get worse risk reward. You're going to make less when we're correct, and you're going to lose more when we're wrong. So every single one of those elements then works against you, and it's going to be really challenging for you to consistently make money. So Sammy, this is a little bit interesting, but what I've seen in my analysis here over the weekend was that when I'm playing reversals, my best reversals are actually off of this 2R or like lower end of these ranges. So fake outs below, especially when we kind of have like range bound conditions here so far, not a great, or it's very hard for me to trust those reversals, I should say. It's not that they can't work, but my best wins are on ones where the price action is much more extended first, and then we get that reversal bar. So again, I don't care if this thing breaks down. Now it's 10 points, right, under my previous entry. That's fine, right? Dealing with that pullback within 3 points of my stop loss would have been exceptionally stressful. And I would have been very annoyed, right, with that trade. And then once I'm annoyed, okay, maybe I panic close when it's at 202. Maybe I do this. Maybe I do that. I have no expectation that I'm actually going to hold through this P&L. Right? So if a trade is strong, it'll give me another opportunity for a setup here. And then I can just play that same thesis lower when we get a high volume breakdown under that 164. Nice work, Jeremy. I'm proud of you, man. Okay, so now, right, we've got a nice breakdown here under these lows. If it can sustain and hold under this 162 on an increasing outlier volume standard, we can look to jump back into this trade. Otherwise, right, the base assumption here until we see a hold on volume through that area is indecisive or choppy price action. So don't fall for this trick of, hey, it's moving fast here right now, until we actually get confirmation that those lows have held and broken under. Otherwise, we're just setting ourselves for fake outs, right? And we saw so many of those last week that I would rather be late but confident that I have confirmation than early and chopped out, right? So chasing just a breakdown here under this 162 now means you'd be down $100, right? And you've given back all the P&L you made on that initial trade. So if we don't get that look we want, we reset, we be specific, and we wait for price action to behave how we expect it to. If it doesn't behave the way that we want, then we wash our hands, right? We walk away and we reset and recharge. If the trade is strong, it'll give us multiple chances to enter. If the trade is weak, it's going to make us feel as if this is the only time we can take the play. So fight back against your greed by being specific with what we're looking for. And right now, we're looking for an increasing outlier volume break, close, and hold under 160-ish, right? And if we don't get that, then just look at the daily time frame and visualize how small this range still has been today. This has not been a massive mega trend day here yet, right? This has been a day of consolidation, kind of a fake out higher, right? Possibly a fake out lower. So buy yourself time to be a rational human being. Okay. So we did get a possible opportunity here. You'd want your stop loss to be 178. So if I were to bring up my order window, first thing I do, click stop loss, 20, 178.75, sell. So as is, okay, risking about $420. Just made a lower low first. So now I know my stop loss needs to be 20, 160.75. So update my stop loss before I do absolutely anything else. And then set my price to be bid. And we wait to see if we get elevator down, stairs up, back into that 150 area. Now we have a slightly higher pullback, right? We're seeing a bit of a fake out here. So we'd like to see this thing get rejected, right? And break down with aggression. And we haven't seen that yet, right? So now stop loss needs to be 165. So changing my stop loss. And we're looking, right, to make lower lows here under this 150 with the elevator technique. So that means price action moves down faster, lower, then it climbs back higher. Well done today, Jeremy. Enjoy your rest of your work day. But 570 ain't anything to complain about, man. So congratulations. Okay, so now stop loss has to be 167. And all of a sudden, right, this trade isn't feeling so enthusiastic because every time we find intra candles of resistance, it keeps plowing through them and making higher highs, right? So maybe we're not that interested in playing that breakdown scenario anymore, right? Because if bears were strong, they wouldn't keep pulling back. We wouldn't get back up above, right, our previous area of resistance that we defined. Right? So we bought ourselves time to make decision. We saw our previous area of resistance that we wanted to turn into downside support get reclaimed. So we probably want to reset this idea and at the very least, right, pass on the burden of confirmation to a larger or longer time frame so that we can smooth out some of that signal noise, right? So now closing my order window, that's no longer something I'm interested in. And I'm back to watching. Does that make sense? Right, so we defined wanting to see NQ on the 3-min break down and hold under that 160 area, right? Closed at 153. That next candle then made an instant lower low and then pulled back right above 160, right? So if we're willing to say that 160 is the point that we want to see hold on one candle, why not pass on that standard, right? One extra after we see a possible fake out here to the downside. So that's why, right, Juan, when you asked, can I tell you the exact momentum or the exact process? Well, for every trade, it's going to be different over what you want to see and what bits of information are important to you. So really what we're trying to do here more than anything else is just trying to be extremely specific with the variables that we're looking to define, because the more specific we can be inside that process, then the easier it is, right, for that event to either happen or not. So the more binary we can make multiple events, then the less we're going to feel as if we're chasing an entry, right? If we're looking to see it hold 160, it can't hold 160. Well, that either happens or it doesn't. On that pullback, we want to see previous area of resistance turn into support for the downside. We define that area as 160. Now it's 5 points above 160. Well, now we can say objectively our previous area of resistance is not acting as support. So instead of then chasing that trade because we have a half-baked thesis, we can slow down, walk away, reset, recharge, and redefine those next variables that we'd expect to see for us to trust this momentum lower. So far, nothing else close, right? 5 minutes, not going to go increasing outlier volume here in the next 30 seconds. 10 min, right? This candle, not on increasing outlier volume. It's on decreasing outlier, so not a good enough confirmation standard. The 15 min time frame as well, right? Just under that increasing volume standard. So we do not have a short-term setup trigger here yet. Sorry, I should say we have a short-term setup trigger, but we don't have a confirmation standard. So we reset, look for potential other opportunities, and see if we can get a look. Okay, so now, right, we possibly have an opportunity to get that increasing and outlier volume, but we need to see this candle close as a most bearish, second most bearish, or normal to have confidence of confirmation. Right now, it seems to be setting up more as a least to a even potential reversal candle here, right, which would not be indicative of a strong downside setup. And yes, also giving us that similar fake out here to the downside. So maybe, right, we're starting to get some confidence that that reversal setup might be the path of least resistance. But then we also have to ask ourselves, okay, now I've seen a possible fake out higher and a possible fake out lower. Kind of tells me that bulls aren't very interested here today. Kind of tells me that bears aren't very interested here today. So if I don't see a very enthusiastic reaction here from either bulls or bears, what's my actual reasonable expectation of being able to get a tremendous amount of follow through here to the upside? Probably limited, right? Because we've already seen bears or bulls be like, nah, I'm bored, right? And then when bears had a chance to break down price action, they failed too. So instead of thinking, hey, this time is going to be different, all I've got right now, right here, is evidence of both sides being uninterested in creating trending price action. So if that's the case, the most likely outcome here, right, would therefore be a day of consolidation, right? Assume price action is going to behave the same way it always has until proven otherwise. Well, right now we've got a fake out higher and a potential fake out lower with no sustained follow through from either one of those scenarios. So that makes it hard, right, to want to justify taking on risk because you're not seeing that payout, right, basically come together. So who's to say, right, that we don't just get stuck at 2,200? If I don't see a realistic expectation of momentum inside the PA, then I can't overrate the ability for the index to give me excess follow through, right? Like I can draw my fibs from red line, right, to the low of my confirmation candle. But with the information that I have here right now, I don't really expect for us to move 190 points from this 182.75 to this 362.50. I have no evidence that that type of range is in play here today. So, okay, maybe I could target high of day as my profit target, right? But all of a sudden, again, it's probably a bit of an outlier for me to expect that I'm going to get that type of follow through. So that tells me, right, I would rather slow down and avoid taking a trade than I would be to play something in the middle of this kind of implied range. Because if it's a day of consolidation and it's a tug of war, and now I'm in the middle of that tug of war, right? The idea of me getting a big day of trending follow through and picking a clear winner, it's like a little bit like messy over who's strongest, right? So if I've seen, that tug of war go all the way one side, all the way back, and then now I'm right back at the starting point, it's hard for me to handicap which side is actually in control. So why be willing to take that extra risk when I don't have a clear indication of a path of least resistance? Right now, it seems like the path of least resistance is to torture price action, right? So to torture bulls, to torture bears, to trap people. 100%, Jen, yeah. It's, instead of the parent trap, it's the trader trap, right? So we're taking the information that the market is giving us, applying a contextual standard to it, saying, hey, I know today's also quarter end, so maybe I just got to take my $100 and go, right? Maybe I'm not going to get a tremendous amount of follow through here today. Or maybe, right, what you see, this is a Crudelli trade, Anthony Crudelli. This is one of the ones he always talks about. Him and Pax always talk about this on Twitter. But one of their favorite trades is the last 10 minutes of the market quarter. So they'll pick they'll wait for like a mega volume bar to show up, either like candlesticks, right, or as like a mega order block. And they're just waiting, right, for a big fund to show up that is trying to do that like late positioning trade. And then they just chase that higher or chase that lower in the last 10 minutes. And right now, we're seeing a fake out after a fake out. Not really enthusiastic price action. So on the day, I'm up $110.72. Maybe that's what I got to take home today, right? Maybe. We still got some time here. But for now, all the evidence I'm getting is of choppy price action. So we had our shot here to the downside. We saw that price action maybe wasn't as strong as we thought it was, right? On this reversal narrative. It's on the 3-minute time frame, right? Bearish engulfing separation away from the range, right? Bearish engulfing candle, bearish engulfing on volume. And then we got that fake out, right? Once you see that fake out lower, you're like, okay, well, if my thesis was strong, I probably wouldn't have gotten faked out. And so instead of trading our P&L and hoping that we get lucky, right, and get that mega follow through, we cut it early, we protect our mental capital, and we reset so that we can keep watching the market smoothly. And we don't know if it's going to go down to 48 or to 39 or to 28.50, whatever, right? We're trying to cut this at the first sign of indecision, because then the next candle or the next 3 candles or the next 5 candles after that is no longer part of our plan. Because if our trade was strong, it would go down right away. It would sustain that move. It would give us that follow through. It wouldn't show us those signs of weakness. And so we don't know when that weakness will break. But by seeing that lack of a correct reaction post entry, we're admitting that our idea isn't perfect. And instead of hoping that we get lucky, we just close it, move on, and reset. So we're being very deliberate, right, with how we're trading our idea. We're not trading our P&L. We're taking new information that gets given to us and applying that to our thesis. Does this information tell us that the trade is strong, or does this information tell us that the trade is weak? If a trade is weak, it can still make lower lows. It can still make higher highs. It can still potentially even give us a fantastic P&L result. But if we get addicted to that process of ignoring those signals and then just trading our P&L because we want it to feel good, then we're going to get bitch slapped by the market when it behaves differently, right, than those lower lows, right? When it rips higher and you get rid of your stop loss because you've gotten so used to saying, oh, even though I get those signals of market not giving me strong strength and I still get follow through, now you're associating a positive reward with bad analysis, and then you're going to be willing to skip other steps along the way. So it's understanding, right, that your P&L lies to you and isn't actually telling you what you need to see at all times, right? So if we obsess over what that number is and we try to make that to be some tremendous, incredible, yada yada reaction, then we're screwed, right? So instead of falling in love with our number, we're trying to fall in love with our process. And I'm trying very hard, right, to communicate that as objectively as I can. And it's not always objective, right? Because once you have a position on, you're no longer objective. You're thinking under the mindset of, oh, this is going to make me money, or, oh, this is going to lose me money, right? You're thinking with your emotions, no longer with your strategy as much. And so you have to work twice as hard to fight back against that greed and that fear, to trust your technique. And so again, this goes back, right? The more specific we can be with our ideas, the more binary we can make our analysis, then the easier it is for us to avoid those obvious P&L mistakes. Does that make sense? Did you guys ever do walkathons as kids? Or maybe you did maybe you watched the Office episode about the walkathon. But what happens at walkathons, right? Every time you get to a certain kilometer benchmark, right? They like stamp your sheet, or they give you a sticker, or they give something along those lines, right? It's like benchmarks for progress. Well, we're basically trying to turn our trades into a walkathon within that context, right? We're trying to define what that next checkpoint is, and we're looking to get a stamp at that checkpoint, or we're looking to get a sticker at that checkpoint. And if we don't get it, we close our trade and we go find our teacher, right? Or our parent or whoever, because we're now lost in our analysis. So if price action doesn't behave exactly like we want, we aren't able to get to those checkpoints that we want after we enter our position, we can't just keep walking in circles. Make sense? And if we try to carbo load our positions, Michael Scott style, then our P&L is just going to puke all over us. Again, another fake out here to the upside on ES. So now pretty much on every time frame, we have a fake out higher and a fake out lower. So our probably only other setup opportunity that we have, right, is on that like red to green reversal on a hold above high a day, or right, if it breaks down here, it would need to be a breakdown under low of day. So now we can filter out a lot of potential setups and just focus on two, right? We're either looking for a move above high of day or a move under low of day on increasing outlier volume. Everything else, we're being told choppy, fake out, annoying, frustrating, pain in the ass price action, right? No indication of a trending move. So we said before, right? Price action is going to behave like it always has until proven otherwise. So we've defined what that proven otherwise looks like now, right? That proven otherwise now is a high vol breakout above. Love that, Aria. It's a great day. $400. Very, very nice. And don't give it back. Log out, walk away. Don't do anything stupid, right? Because $400 a day per account gets you to your objectives very quickly. But now turning that $400 into a $400 loss, then that feels like the death of hope, right? So well done. Proud of you. So guys, the secret to trading is realizing that there is no secret, right? It's consistency over action. It's progress over perfection, right? And it's fundamentals over P&L. And if we just do that over and over and over again, and we play the probabilities game, we make a ton of money. When we skip those steps and we get off the wagon, we get our ass kicked. And we get our ass kicked in the most random way possible, right? So not every day is going to be a $20,000 day. Not every day is going to be a max loss day. But it's just setting ourselves up to avoid as many of those max losers as possible. right? And understand that sometimes you got to take your base hits before you get your home runs. And if we look at our P&L from the month of September, we had 2 home runs and then plenty of great base hits. And those base hits alone would have made you like 20 grand. And then you put in those home runs, right? You add in the cherry on top, and all of a sudden you have a tremendous edge with a tremendous amount of like a margin for error. So big wins don't happen because we swing harder. They come from a consistent, repeatable process. And the more we obsess over that process, the more that I'm a psychotic asshole, protecting myself from making those like impulsive decisions, then the better my trading goes. The more accountable I am to myself over my process, the better my trading goes. And then the P&L on a day-to-day basis is just noise, right? It's not real. It's not something that I need to like overthink or get stressed out over. 100%, Derek, 100%, right? They create fantastic rallies. And if we just think back on our own trading over if I just didn't take the trades that I felt like were going to be green but weren't actually following my rules, you're probably getting a lot more base hits and you're not striking out as much, right? And we've all, I think, got evidence of that in our own trading. If I just avoid the trades that I know I shouldn't take, but I'm willing to take them anyway, right? When I swing for that curveball outside of the zone, okay, every now and then I might get good contact and hit a home run, but I'm going to look like a fool when I go out swinging. That's okay. But I'm not convinced by this volume here. So opening volume on the 5, 2.3. Just a little bit bigger. I would prefer a larger time frame. I think at this point, I'm going to struggle to trust this narrative. Like, volume is negligibly bigger. So I'm very, I'd rather be patient here, Ben, than take this trade. I have some demons with CL as well. So I'd rather not be aggressive with it. Unless it's like so spit in your face obvious that I have to take it, I would rather be patient. So it's not to say that it can't be a setup, but just with the price action I've seen here all day, I am a little bit skeptical. Like just deja vu to Friday pretty much, right? yeah. And just remember, guys, right? We are about to go into one of the most volatile periods that we're ever going to see, right, in the markets. That election run up here, we've got no market holidays until then. We've got nothing. Maybe Remembrance Day. But it's going to be a relatively clear slate for us here going forward. So Just delay that gratification a little bit and fight back. Oh, Jen, I mean, the amount of times, yeah, CL has treated me like a girl at the bar far too many times. Getting good signs, and then, you know, you think you see a smile, and then you get rejected. It's like, ah, fuck, here we go again. Sounds good, Emil. Enjoy your day, man. Can't say I'm familiar with that show, so I can't comment with much conviction, but I will take your word for it, Jen. At the moment, we would need to see a breakout above 2262 or a breakdown under 2126. And it seems like either scenario here is a little bit unlikely this morning. ES would maybe be the most likely, but we keep making higher highs and not being able to close above them. So I'm seeing signs, right, of that indecisive PA that I would like to avoid. So for now, no realistic expectation of getting another entry in NQ. We're like, 60 points away and 100 something points away to the upside. So it's got a lot of work. ES maybe, but again, seeming unlikely. If it hasn't done so now, it's going to struggle to do so, right, in our morning session. We also know, right, that statistically, markets like to make their high of day in the first 90 minutes or a low of day in the first 90 minutes about 60 to 65% of the time. So for us to now get a breakout above in that lunch time frame and for it to sustain that move higher, we're anticipating price action to behave like an outlier, right? Or to kind of go against the system to a certain extent, right? So we have really limited evidence of today being an outlier day. We're not seeing like a crazy outlier volume. We don't have a tremendous amount of news backing up our thesis. And so we're kind of going to assume that price action is going to behave how it always behaves until we get that proven otherwise. And we don't really have an obvious proven otherwise here today. Make sense? So the next most likely time where you're going to expect to make a new high a day or a new low of day, if it doesn't happen in the next 8 minutes or so, is during that like power hour time frame. So last 90 minutes of the session. So after like 2:15 Eastern. Make sense? What do you mean by that, Chad? Can you rephrase that a little bit? Yeah. So that just tells me that the difference between the high and the low of the candle is 8.5 points. Or on NQ, right, it's 64.5 points between the high and the low of the first 5-min candle. On the 3-min, right, it's 62.5. On the 30-min, it's 93 3/4. So all it is telling me how big the opening range is, yeah. Not high and low of the day, it's high and low of the first candle. What's the difference between the high and low of the first candle? Yeah, no worries. And again, we maybe would have made some money, right, on this NQ reversal, but not ever getting towards our upper targets, right? And so we nailed that analysis too, right? So, okay, even though we maybe would have gotten a good P&L outcome from that, from like a process perspective, we would have cheated ourselves of our gains. And what we can't do as traders is basically overrate our ability to make money when price action doesn't follow our rules. It's one of the hardest things to wrap our head around, right? Because we're all optimists. We all see ourselves, oh, I would have made money on this, would have made money on that, would have done X, Y, Z. But that's just overrating that ability. Does that make sense? So the sooner as traders we can not believe every thought we have, right, the better. Because most thoughts that we have intraday aren't really designed to make us money. Have any of you guys had issues with how the YouTube looks here today? I know I made a few little changes. It should look relatively the same. But just for when I bring up my order window, it shouldn't be too dramatic of a change. Cool, cool. So any questions here, team? Anything you want me to go over? Anything to explain? Happy to try to do that here now. Yeah, 100%, Ben. Yeah. And I like reversals once price action is very extended. More so than when it's like in the middle of the range. Especially when I look at it on a daily time frame. We're like pure doji, right? So I want to see like a big fake out, big exhaustion, right? Reasons to think that here bears or bulls are out of juice. And I didn't really get that price action here today. No clear indication of capitulation in either direction. Again, objectively, this is a good candle. Good volume profile. Yeah, so when I set up my order window, let's say that I'm going long. This is not a trade I'm taking, right? But this is, say, hypothetical. So if I set up my window, okay, got my Fibonacci's mapped out, and I have my stop loss at 162, the very first thing I do is tick stop loss. Change that to be 162. And then change this to be ask. Especially if I'm under this 236 fib level. And then I'm just watching, okay, is my risk less than my $500? Yes. Cool. That would be a reasonable risk management position. If this would be, say, less than $250 or less than $300, I could go 2 contracts. But the first thing I always tick is stop loss. Make sure that that number is what I want it to be. Because for me, this is the most important part, right, of that initial execution timing. Because I got to make sure that that stop loss is exactly how I want it to behave. If it isn't, not interested. Yeah, so this is not a Top Step account. This is a My Funded Futures. And I'm doing multiple executions. So on my other screen, right, I also have my Top Step X. I have those 5 accounts. Once this one is funded and I pass my evaluation, I will be at 6 accounts. So I'm introducing this level of transparency, but hopefully also increasing my P&L potential. For now, I have no further plans of expanding with my funded futures. I saw something on Twitter this weekend about how they're introducing their own internal copier. But we'll cross that bridge when we get to it. Truth be told, like, I'm happy trading with 5. 5 accounts is plenty of action. It still allows me to clear, 6 figures a month when I trade well. So fundamentally, don't feel like I need more. Yeah, Chad, yeah, absolutely. For me, like, the number of accounts is a little bit of a distraction. Like, I want to keep the main thing the main thing. And for me, when I control my variables, when I control my strategy, when I control my position sizing, I can make more than enough money. But if I start to think, okay, let me get all this leverage first, let me build up this incredible position sizing, that's going to smooth out the cracks. I'm kind of lying to myself a little bit. Over how likely I am to actually make money. I'm distracting myself from what my core objective is. Well, the trade copier that I was using, Nate, just stopped working. So I was doing it through Replicanto, and the API access that they had granted, they seem to have removed. And so it was starting to just become a bit of a nightmare from an execution perspective. A lot of errors, a lot of this, a lot of that, not getting fills at the price you want, some accounts going long, some accounts going short. So it's just starting to get glitchy. I have, Damas already said, right? My setup here for a long on NQ is a breakout above high a day or a breakout below low of day. I have not tried Quant Tower here yet, Mike. I've heard good things. That maybe would be the next step to go towards. But even, right, on NQ, it's a good candle shape and it's increasing volume, but it's not outlier volume, right? So there's nothing about this price action that tells me this is like a tremendous increase in momentum. Any other questions here, team? We do not anticipate placing any further trades here this morning. ES keeps faking out higher high, right, without being able to hold above previous high a day. Volume has dropped off below that outlier standard. So I'm not convinced I have a clean setup here left. And yeah, maybe crude was the trade, but this hasn't exactly been a smooth run higher. This would have been a slow, painful grind as well. So again, right? Not enough volume for us to have considered that to be increasing momentum. And now it looks like it's about to do a little fake out and lower low. So that increasing outlier volume is a key element. No trades without outlier volume. It's got to be different than normal. All right, guys. Any other questions here? Nice work, Kenneth. You should be very proud, man. That's a great day. Yeah, Damas, no more trades here. I would say if you have an opportunity for a trade, it'll happen in power hour, right? Not historically during this time period. All you've seen, right, is a fake out higher, a fake out lower, and no follow through in either direction. So my base assumption is that markets are going to behave like they have all day until you get some proven otherwise. And there's no evidence of that proven otherwise. For me, yes, Brian. I'm sure there are examples where you don't need outlier volume. But I'd like to keep it to be that simple. Because what I don't want is for one trade to think, okay, this trade I need outlier, this trade I don't need outlier. And then all of a sudden you like kind of confuse yourself over like, it's like paralysis analysis, right? So too many decisions, too many different variables. What do I do when and when? And then you just get confused over what standard you should be applying at that time. So the more consistent I can make my process, easier it is for me to keep those things relatively binary. And hopefully, right, that makes it easier for me to follow my system and trust my technique. All right, so time to fill in the journal. All right, guys. Excuse me. Final call for questions here. Final call for questions. Final call. Final call. Yeah, you too, Jen. Have a great day. Enjoy Monday Night Football. It'll be a big game. Sounds good, team. Like always, right? My objective here is to be as transparent and as honest as I possibly can be. And I'm incredibly invested in all of you all achieving the success that you want. And my goal here, right, is to not fish for you, but to teach you how to fish and to give you all the tools and show you the spots and give you as many advantages as I possibly can. But you will only catch fish, right, if you take accountability for, you know, your where you cast your rod, right, and what kind of bait you use, and you know, what time of day you go out there, things along those lines. Now, I'm not a fisherman, so my analogy here probably not as great as it could be. But I promise you, your trading will get better the more accountability you hold yourself to and the higher standard that you hold yourself at. I say this many times and I'll say it again, but you win by holding yourself to a standard that would make most people uncomfortable. And when you hold yourself to that standard, it is inevitable that you will achieve the success that you want, even if that success isn't immediate. So with that being said, we had a great September. We kind of got our ass kicked Thursday, Friday. Small little bounce back day here today. But if we keep behaving the way that we did this morning, then we'll be just fine, right? No one wins. Your P&L doesn't go in a straight line. Sorry, no one wins all the time is what I meant, right? And so we need to put ourselves in situations where we can survive that variance. We can survive our mistakes and put ourselves in situations where we have a strong margin for error. And the more that we obsess over those variables, the better our trading goes. So, same deal like always. If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. And in the meantime, have yourselves a fantastic day, and we'll get after it again tomorrow. So have yourselves a great one, and I'll see you tomorrow. Peace.